You are watching Market Watch, the brief overview of the key events from the world of finance. In April 2025, global financial markets faced heightened volatility triggered by unstable U.S. trade policies and weakening business activity across Europe. The Ifo Business Climate Index in Germany and the Eurozone's PMI point to slowing economic growth, particularly in the services sector. The UK is also showing a decline in manufacturing activity, hitting a 20-month low. Against this backdrop, European stock markets opened flat, while U.S. futures gave up earlier gains. U.S. President Donald Trump initially criticized Fed Chair Jerome Powell but later walked back his statements, adding further uncertainty. Cleveland Federal Reserve President Beth Hammack stated that the Fed has room to continue reducing its balance sheet despite ongoing economic uncertainty. Since the start of quantitative tightening in 2022, the Fed's assets have shrunk from $9 trillion to $6.8 trillion. Hammack emphasized that an oversized balance sheet can contribute to excessive risk-taking in financial markets. While the Fed has slowed the pace of reduction, this does not indicate a full pause. If needed, the Fed is ready to deploy short-term interventions, such as open market operations, to maintain its target interest rate range. Oil prices have stabilized after nearly a 2% drop, driven by fears of a potential output increase by OPEC Plus members and uncertainties in U.S.-China trade relations. Brent and WTI gained slightly but remain under pressure due to internal discord within OPEC Plus, particularly after Kazakhstan's statements prioritizing national interests over production quotas. Mixed signals from Washington regarding tariffs on Chinese goods and ongoing nuclear talks with Iran add further uncertainty. Analysts warn that continued internal disagreements within OPEC Plus could spark a price war, while U.S.-China trade tensions may sharply reduce global oil demand. Amid trade-related market turbulence, U.S.-based cryptocurrency exchanges are actively expanding their derivatives offerings. Since late 2024, several crypto platforms, alongside the Chicago-based CME Group, have been enhancing access to crypto derivatives. In April 2025, open interest in Bitcoin futures surged by around 30% since the start of the month. The rise in trading activity reflects strong investor interest and the desire to capitalize on market volatility. As a result, crypto derivatives are becoming an increasingly important tool in navigating global economic uncertainty. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.